G'day everyone, welcome back to Pete's Investing. Today's May 26, 2023. This is the Facebook/Meta share price review. So what here on the weekly, we're showing a bullish signal. It's been in that way since February after breaking up from this downturn. And more recently, we've had a few bullish signals on the daily as well, but we're currently in a neutral signal. There's a bit of a negative or a bearish divergence on that, and I'll cover that in a minute. First, let's go to the weekly. What we look at is the triple moving average of the price chart, and that looks at the moving average 3, 5 and 60, and that's in an upswing. And likewise the CCI 150 moving average 5 and 50 is also in an upswing, hence the bullish signal on the weekly. However, we prefer to trade when the weekly and the daily are aligned. So during these periods, when the daily was up, that would have been a nice area to go long as well when the weekly was up. But when the daily starts showing a neutral or a negative signal, that's when we pause and think about going long. Now, look, zooming into the daily for a minute. First of all, let's look at the, if I maximize the share price. Again, we look at the support resistance areas. It did bounce off this support at 88.80 down here, and it broke through this resistance at 197.10 and is still moving to the upside. But notice on this Fibonacci retracement here, it's broken up through the 50% and it's now reaching the 61%, which is always a critical level. So it may get as high as that, but there's no guarantee, of course. I'm not telling you that. I'm just saying probabilities and what it usually does. The 61% is key because it could always bounce down from that and have a bit of a retracement, or if it breaks through that, it could be a continuation of the uptrend. So we'll wait and see what happens if it gets to that level and how it behaves. Also, so I've got a divergence here which I'll talk about on the, let me just go back to, what am I doing here? Here we go, restore panel. Okay, so what I've got here, I've got a divergence happening at the moment, but let me talk about this one historically, what happened back here. So if I zoom into this period, you'll notice here the CCI during April 2021 and September 2021, there was a bearish movement on the CCI versus a bullish momentum on the price chart. And that's always something we need to be mindful of. And this was an early indicator that the price was going to eventually at least retrace, if not collapse, and eventually collapsed. Now you'll notice how you would have traded that. You would have drawn a channel between those highs and bring it down to the lowest candle in that channel range. So that would have been your channel, and that in alignment with this. So as soon as the CCI keeps breaking to the downside, as soon as the price breaks below that channel, which it did there, that was a clear indication that the price was going to at the very least retrace and then bounce or continue to the downside. Now you notice it came down. So what you do then is, in terms of placing potential targets of where it may have stopped, you place a Fibonacci between that low, just between that recent low and that high, where that channel was. And you can see there it came down and bounced around between the 38% and the 50% Fibonacci initially, before it consolidated there for some time between that range. So that's historically what happened, and the price then eventually, if I zoom out, eventually did decline further. So what we do now is, just let me clean up this, let's look at this more closely with a recent, again, generally the CCI tracks with the price chart. When it does that, it means the price is moving, and we don't really look at the CCI more anymore. We just simply look at placing long trades. So had you placed long trades during this period, that would have been a nice little return for you, so long as those long trades were in alignment with the long period of the weekly. But what's happening now is the divergence, a negative divergence or a bearish divergence, is happening with a CCI versus a bullish divergence on the price chart. So what that means is we've got to be careful. This might be exhausting very soon. Now, these, of course, these are not guaranteed. They can always fail. And for this to fail, we need to see the price continue to the upside, but we also need to see the CCI break to the upside, which means that CCI divergence has failed. For this CCI divergence to work, it may not happen today. It could be another few days or even weeks before this continues and works. So what we need to see to it, assuming it started working today and the price started declining, we would then draw another channel between that high and bring it back to the lowest candle. So if that price broke below this channel now and this CCI continued on a downturn, that's where we start seeing this CCI playing out, and there will be a potential reversal, at the very least a retracement to the downside before further advancements. So I suppose what I'm saying is just be careful about going long in this environment, because this is a weakening sign and we may see further a decline in the coming days or even weeks. So again, so long as this keeps trending down and this keeps trending up, we want to see it track. We're going to track it. You could argue this was a divergence playing back from this period to this period. That could have been also a scenario. So for example, you would have potentially done that versus a share price versus doing that. So you could have actually started back here. That's what I mean by waiting until we see a decline and a break below the channel. So had you drawn the channel in that period, you would have done it between there and there, and you would have brought it down to the lowest candle, which was that period there. So if you were tracking it from that period as a divergence, as a bearish divergence, you wait for the price to break below that channel there. Again, just a couple of tips in terms of how to read these divergences and potentially be aware. So if you are going long with Meta or Facebook and you're making a nice little profit, just be aware, look out for it to break. I would probably wait for it to break below that first channel we drew and then take your profits, because that most likely will play out to show a decline in the share price. Anyway, also I've got up here a back test going long only. So you can see there during that period when the price was going up, we're getting quite nice little returns until this period when the share price started declining. That's when it had a drawdown effect on your profitability. Now, to avoid that drawdown effect, what you do, again, golden rule, always trade with the direction of the major trend. So during that period there, you can see there when the price started declining, that would have been back in September 21. So that would have been that period there. So you would have avoided taking trades, long trades during that period, which was that period there. And more recently, you would have started taking long trades during that period. You can see there, bullish signal on our indicator and a bullish signal on our weekly indicator. So again, to understand how to trade using the average down approach, reference the links in the description below, subscribe and like us, and we've got the subscribe to our Patreon page where we also do weekly scans of stocks, currencies and commodities, and also answer any questions by Patreon members. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.